Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A second bullish white soldier yesterday and a follow-on to Friday's bullish engulfing pattern and earlier hammer pattern. The most interesting feature was the market piercing the lower tine, currently 101.55 of the broken, but seemingly still effective January to May 2021 bearish Andrews pitchfork. And when I say meaning, it's piercing it from underneath and back up into it. And that's also breaking through as well the November 2002 high at 101.70. I'd normally look to retire such a broken pitchfork because we've been trading outside it. However, given the seeming current lack of initiative in going lower and what happened when the market popped up over the upper tine, currently at 108.96 back in February, and then popped back within it again. And so I've decided to keep the bearish Andrews pitchfork still on the daily chart. Looking below, we have the interesting 61.8% absolute Fibonacci line at 99.15 as support. And then there's the primary target X for the ascending triangle at 99.05. Whilst the secondary, harder to reach, target X1 is down at 96.10. Now, so far today, well, we're breaching once again over the lower tine, further strengthening the bullish incentive. Now, two things now. Firstly, we now see the reassertion of the bearish Andrews pitchfork again. Secondly, we have the little seeming resistance we have seemingly little resistance topside until the January 2017 low at 103.38. That's the bottom area of the previous imperfect descending triangle. Cable, aka sterling against the US dollar. Almost, but not quite, a gapping move high yesterday and a second bullish white soldier. The market is still in between the middle tine below, currently at 117.39, and the upper tine above, currently 120.79. The late April to late May bearish shift pitchfork. Now further above we have the May 2020 low at 120.73, as well as the paralleling to the upper tine short moving average, currently at 120.24. Below the market, you have some light support between 118 even to 114.5 at dates from March 2020. Then the harder to reach target X2 at 115.30 for the recent diamond pattern, before the October 2016 flash crash at 114.48. So far today, a little higher from the open, but still within yesterday's range. The market continues to show a lack of desire to press the light support between 118 to 114.5 just yet. Euro sterling. A reactionary bearish harami yesterday after the previous 3 sessions of bullish white soldiers. Below we have the off-tested 3 support levels from the last few weeks, or couple of weeks actually. The rising medium moving average currently at 84.57, the flatlining long moving average currently 84.41, and a September 21 to date broken downtrend currently 84.27. Now they are now separating out and thus losing some of their combined potency. However, the broken downtrend is very interesting as it is also the upper trend line of the very large falling wedge pattern, currently 84.27 to 81 even. This pattern originated many months ago and is still in operation, but it has fallen into the shadows a little with the rising prominence of some of the more recent diamond patterns. It was also a second consecutive clear close over the recent resistance of the April 2021 low at 84.70. Now going back to the falling wedge pattern once more, the potential target X4 for this pattern is quite ambitious in the 88.65 area, off the top of my daily chart, and a really big ask. Closer in we have target X1 in the 87.65 area. This is the harder to reach secondary target for the recent smaller lopsided diamond pattern, plus target X3 in the 88 even area, the harder to reach secondary target for the recent extended diamond pattern. Now on top of this, we have targets for the December 2021 to May 2022 reverse head and shoulders pattern. A primary target X5 for this reverse head and shoulders would be in the 87.75 area. And a harder to reach secondary target X6 would be in the 88.65 area. Targets X4 and X6 are currently just up and off the top of my daily chart. Now all these targets on the upside have been under threat last week and the week before, as the market dropped lower, specifically dropping below yet another pattern. I have to say this daily chart seems to be full of these patterns. Anyway, this last and latest pattern is a late March to mid-April based large ascending wedge pattern, currently 88.13 to 86.44. And unlike the others, it is a contrary one, a bearish pattern. This has a primary target in the 84.35 area, and a harder to reach, seemingly much harder to reach, target X7 in the 81.15 area, right off the bottom of the daily chart. The reason I've marked the primary target is that it's already been achieved. Thus, if we do carry on seeing a reversion back up, then one could say that the market has indeed reached the primary bearish target below and then be reinvigorated with the bullish incentive enough to revert and try higher. This is an interesting concept. I hope you think so as well. So far today, a move higher on what looks right now like an immediate countering bullish engulfing pattern. Quite a good one actually. However, prices are approaching their first real test overhead. That's the short medium moving average, currently 85.35. Beyond that, we have the upper rising trendline extension of the recent diamond patterns, currently at 85.86. US dollar against the Indian rupee. An immediate countering key reversal up, if only just, but also a bullish closing white Mariposa yesterday, with the market once again approaching the all-time high made last Thursday. It is also closer to the harder to reach secondary target X1 in the 80.43 area for the recent bullish measured move higher. Overall, the market is still in between the overhead and middle time, currently 80.39, and the lower time, currently 78.94, the January to early April bullish Andrews pitchfork. This bullish pitchfork has been running the bullish angle of attack of here so successfully ever since the end of the first quarter. So far today, an attempt higher, but it has also so far failed to really approach the 80.21 high from last week. And looks like a bearish harami right now. Below, we still have the 100% projected Fibonacci line at 79.81 as a potential support of sorts. US dollar against the Brazilian real. A hammer pattern yesterday, usually seen as a bullish reversal pattern, though if you called it a possible hanging man pattern, well, I would understand where you were coming from. This follows the previous session's indecisive spinning top with the close right on the middle time, currently at 544.69, the April to late June bullish Andrews pitchfork. Now, taking a look at the larger picture, I note the ugly double bottom. Yes, that is what it's called, an ugly double bottom. Formed over this year with potential topside primary target X in the 568.85 area and a harder to reach target X1 off the top of the daily chart in the 584 even area. Meantime, keep an eye on how the market continues, or not, utilizing the bullish Andrews pitchfork as its principal bullish angle of attack. US dollar against the Mexican peso. A second bearish black crow yesterday, still following on lower from the recent inverted hammer pattern made last week. It was a second confirmation of the major break and close below the neckline, currently at 2073.35 of the mid-March to early July reverse head and shoulders pattern, as well as the 50% Fibonacci line of the November 21 to March 2022 move at 2078.02. Overall, the market is in between the middle time overhead, currently at 2065 even, and the lower time below, currently 2013.85, of the late March to late June bullish shift pitchfork. The market also dipped down below the long moving average, currently 2041.35, but pulled back up and closed over it. However, the penetration was quite a good one. So further below we have the flatlining medium moving average, currently 2019.35, and the slowly rising short medium moving average, currently 2011.44. This last one is now intermixing with the lower time. So far today, a fresh attempt lower, down through the long moving average, but so far not as determined as yesterday, with prices still within yesterday's range. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Tofpik and ADM Investors International Limited. And here comes the final part.